Hello, I'm Jason Stevenson, the analyst for Resource Speculator and Money Morning. I'd like to talk to you today about the gold price. So I did an update on gold a couple of months ago, and it was around the time when gold hit the resistance line, the blue resistance line up here. And I said that there was a high probability or a good probability of gold pulling back from this resistance line back to the support line. Now today I'd like to follow up on that report. So as you can see, it's my analysis is coming off on target. So if we're looking at the blue resistance line dating back to 2011, so the high was around 1900 per ounce, and the low that year was around $1,307 per ounce. So we can see that if we're looking at the blue resistance line, gold hasn't broken out of its resistance trend dating back for the last 5 years. So that's an ominous sign, especially with the surrounding events that we've seen recently with the Brexit and a lot of other uncertainty with Deutsche Bank, which I've been talking about in Money Morning. When we're looking at the support, we can see that there was quite a bit of heavy selling coming off from 2012. And the reason behind that was because gold rallied into 2012 based on the European sovereign debt crisis risks, with Greece, Portugal, Spain and Italy experiencing a bit of trouble with their sovereign debt. And then when Mario Draghi came out and rescued the world and said that he would do whatever it takes to save the euro, that's when you saw gold starting to crash into 2013. And the overextension saw the bounce into the middle of 2013. And ever since, we've really seen the US dollar move stronger and higher, and we've seen gold trickle down into a bear market. This year, however, gold has actually performed quite well. And as you can see, when we're looking in 2016, it's blasted out. And as I've been writing about, the reason behind that was earlier in the year, the stock market just started to see a bit of a correction. You had a bit of risks in China on the macro side, and you also saw the European central, or the Japanese central bank, go to negative interest rates. And that kind of spooked the market. The Fed all of a sudden saw the stock market crash and said, hold on, we can't raise rates 4 times, which they promised back in December. We might just raise it twice. And that's what really sent gold taking off into February right here. And then we saw a bit of consolidation before gold started to pull back into May. And then we saw the Brexit, which saw gold pretty much take off to the upper resistance side. As we've seen this week, and which I showed in Money Morning yesterday, Resource Speculator, the gold price has actually started to crack below the green resistance line. So that's an ominous sign of what to come. And the reason why gold actually fell below the green support line is because Loretta Mester from the central bank of the US Reserve Central Bank came out and said that they will raise rates in November. Now there's pretty much zero chance of the Federal Reserve raising rates in November. And the reason behind that is that it's an election month. And the futures market is actually showing that there's a 15% chance of the Federal Reserve raising rates in November. So we're calling their bluff. And remember, back in, I think it was March, the Federal Reserve came out and said, oh, we don't need to worry about the Brexit either, we can raise then. But as you saw, as we approached the June, when the Brexit month was actually happening, the Federal Reserve got cold feet and said, oh, we can't raise rates now because there might be a bit of systematic uncertainty and a bit of systematic risk. So as I expect, as we'll be heading into later in the month, the Federal Reserve will come out and say, oh, we can't, there's a new government, there's an election, we don't want to upset anyone. So that's why the futures market is pricing in such a low probability that the Fed will actually raise rates in November. Now, tonight is very important for gold. There's another non-farm payrolls results. So the expectation is that the amount of jobs created last month was 177,000. If the job report comes in stronger than that, you can expect gold to get sold off. Now, perhaps I believe that we may see gold hit 1,225 per ounce if there's a strong non-farm payrolls report tonight. The reason I say that is because, as we can see, there was a bit of resistance around 2014, 2015 here, and we saw a bit of support around 2013 and 2014. So I'd say that this is the next support level for gold. Now, if the non-farm payrolls number actually comes out weaker than expected, I'd expect a re-challenge perhaps of the 1,300 per ounce level. So I hope that this, before I close off, I still have expectations that the Federal Reserve will look to raise rates in December, so I wouldn't start piling into your gold producers and developers right now. Speculative stocks are fine, but it depends on what speculative stocks you are buying. So I hope this video helps you with your investing. Thanks for watching. If you want to learn more about gold stocks and where they will be going in the next year, click the link below.
Make sure you like us on Facebook to get the latest market updates.